I'm your rich uncle. I want to see my family win. Follow my advice, and you'll be the rich uncle in your family.
What if everything you've been taught about saving money is actually holding you back? Keeping cash in a savings account might feel safe, but in reality, it could be silently losing value every single day. Inflation eats away at your money, while opportunities to grow it pass you by. The truth is, the wealthy don't just save, they make their money work for them. So before you stash away another dollar, ask yourself, is your cash really safe or slowly disappearing? In the next few seconds, you'll see why saving cash might be your biggest financial mistake. Today we will talk about why you should stop saving cash immediately. So before we start, make sure to hit the like button and subscribe to my channel. The illusion of safety in saving cash. For decades, saving cash has been considered the foundation of financial security. From childhood, many people are taught that putting money aside in a savings account is the smartest and safest financial move. While this advice may have been effective in the past, today's economic reality tells a very different story. In fact, blindly saving cash without a strategic plan can actually harm your financial future. The idea that your money is safe sitting idle is one of the biggest misconceptions in personal finance, and understanding why could completely change the way you manage your wealth. The silent killer. Inflation erodes your money. One of the most important reasons to stop saving cash excessively is inflation. Inflation refers to the gradual increase in the prices of goods and services over time, which reduces the purchasing power of your money. For example, what you can buy with $1,000 today may cost $1,100 or more in a few years. If your cash is sitting in a low-interest savings account that earns little to no return, it is effectively losing value every day. Even if your bank balance looks the same, its real-world value is shrinking. This silent erosion often goes unnoticed, but over time it can significantly impact your financial stability. Opportunity cost. The price of playing it safe. When you keep your money in cash, you're not just losing value due to inflation, you're also missing out on opportunities to grow your wealth. This is known as opportunity cost. Money that sits idle cannot generate returns, dividends, or profits. On the other hand, investing in assets such as stocks, real estate, or businesses allows your money to work for you. Over time, these investments can generate compound returns, meaning your earnings begin to earn more earnings. By choosing to save cash instead of investing, you may be sacrificing long-term financial growth for short-term comfort. The wealthy don't hoard cash. A key difference between financially successful individuals and the average person lies in how they manage money. Wealthy individuals rarely keep large amounts of idle cash. Instead, they allocate their resources into income-generating assets. Whether it's investing in the stock market, acquiring rental properties, or building businesses, they focus on growing their money rather than letting it sit unused. Cash, for them, is simply a tool for liquidity, not a long-term strategy. This mindset shift is crucial if you want to build wealth rather than just preserve what you already have. Low interest rates. Savings accounts aren't enough. Traditional savings accounts often offer extremely low interest rates that barely keep up with inflation, if at all. This means that even though your money is technically growing, it is not growing fast enough to maintain its purchasing power. In many cases, after accounting for inflation and taxes, the real return on your savings is negative. This makes relying solely on savings accounts an ineffective strategy for long-term financial success. It's important to recognize that saving money is only one part of the equation. Growing it is equally, if not more, important. The importance of investing. If saving cash is not the best strategy, then what is? The answer lies in investing. Investing allows your money to grow over time by putting it into assets that have the potential to increase in value or generate income. Stocks, bonds, mutual funds, exchange-traded funds, ETFs, and real estate are some of the most common investment options. While investing does come with risks, these risks can be managed through diversification and long-term planning. Historically, well-diversified investment portfolios have outperformed savings accounts by a significant margin, making them a powerful tool for wealth creation. Emergency funds, the right way to hold cash. This doesn't mean you should eliminate cash entirely. Having an emergency fund is still essential. Financial experts recommend keeping enough cash to cover 3 to 6 months of living expenses. This provides a safety net in case of unexpected events such as job loss, medical emergencies, or urgent repairs. However, beyond this emergency reserve, holding large amounts of idle cash is generally not advisable. The goal is to strike a balance between liquidity and growth. Psychological comfort versus financial reality. One reason many people continue to save cash is the psychological comfort it provides. Seeing a stable bank balance can create a sense of control and security. However, this emotional reassurance often comes at the cost of financial progress. True financial security is not about how much cash you have, it's about how effectively your money is working for you. Shifting your mindset from saving to growing is a critical step toward long-term success. Diversification. Spreading risk wisely. Investing doesn't mean putting all your money into one place. Diversification is the practice of spreading your investments across different asset classes to reduce risk. By diversifying, you protect yourself from significant losses if one investment performs poorly. This balanced approach allows you to benefit from growth opportunities while maintaining a level of financial stability. Compared to holding cash, which guarantees a loss in value over time due to inflation, a diversified portfolio offers a much more effective way to preserve and grow wealth. Taking action from saver to investor. Transitioning from saving to investing may feel intimidating, especially if you're new to financial markets. However, taking small, consistent steps can make a big difference. Start by educating yourself about different investment options, setting clear financial goals, and creating a plan that aligns with your risk tolerance. Consider consulting financial professionals or using reliable investment platforms to guide your journey. The key is to start early and remain consistent, allowing time and compounding to work in your favor. Rethinking your financial strategy. Saving cash is not inherently bad, but relying on it as your primary financial strategy can limit your potential. In a world where inflation steadily reduces purchasing power and opportunities for growth are abundant, it's essential to rethink how you manage your money. By shifting your focus from simply saving to actively investing, you can build a stronger, more resilient financial future. The sooner you understand this shift, the sooner you can put your money to work and ensure that it grows rather than slowly disappears. The real strategy is not saving less, but saving smarter. The idea of stopping cash savings immediately is not about becoming financially reckless, it's about upgrading your financial strategy. Holding large amounts of idle cash may feel safe, but in reality, it often leads to silent losses through inflation and missed opportunities. True financial strength comes from balance, keeping enough cash for emergencies while actively investing the rest into assets that grow over time. The goal is not to abandon saving altogether, but to stop depending on cash as your main wealth-building tool. Money should not sit still, it should move, grow, and multiply. When you shift your mindset from saving money to building wealth, you start making decisions that work in your favor long-term. In the end, financial success is not about how much money you keep in your bank account today, it's about how much your money can become tomorrow. All right, my future millionaires. That's a wrap for today. If you got some value from this, don't just sit on it, hit that like button. Share this with someone who needs to hear it. And of course, subscribe to the channel so you never miss out on more money-making secrets. Turn on those notifications because wealth waits for no one. Stay smart. Stay hungry. And I'll see you in the next one. Let's get rich.